Good morning, guys. Welcome to this Wednesday, August 12th. And we are looking at the market in the holding pattern, a little bit to the upside. We are waiting for the CPI number coming out today. That's going to be the big news for the morning. CPI at 8:30. We've already got the mortgage apps that came in a few points higher. A few points higher, so not a bad read there at all. And we have an old report at 10:30 and the 10-year auction at 1. So that's pretty much it we got there. You see here, this one is not responding slowly. Anyway, I'm just looking up the numbers on the mortgage app. I think it was 2-3 points across the board to the upside. Not a bad number. But we're waiting for the CPI read, and that's going to be the one which is going to be kind of driving the news for the day, I think. We also have some earnings come out. We know CoreWeave came out. They had another one, Nebius, coming out as well. These are hyperscale companies which are at least CoreWeave reported good. I don't know what the Nebius have done just yet, but CoreWeave is up like $16 in the pre-market. The AI trade alive and well, at least for now. So there we go. So we have a little bit of positive stuff going on in the economy and or in the stock market, I should say, and it's reflecting in the futures. You can see how the Nasdaq is looking a little bit a little bit better than the ES is in terms of strength in the overnight. So I would start off. I mean, we haven't really changed anything big right now. We're still very much in this capital flow scenario, so in this move out of the middle on the capital flow chart to the upside, and we are still just building values. If I hold this together again, I mean, we see yesterday's trading, hold this together. This is just the distribution which is building and looking pretty nice, but it's sitting there building value right now, and we're waiting for a piece of news which can potentially break us out of that range. Now, CPI could very well be that news, and I think if the number comes in harder than expected, chances are we may see a weak reaction or a negative reaction. If it comes in line or maybe even better, then I think the market just takes off again. So they have definitely opportunities here for the market to move higher. Now we do have PPI tomorrow, and we have retail sales on Friday. So we got more stuff coming. I don't think the retail sales is going to be that big of a deal really, but it is definitely a number to pay attention to. So Friday we get retail sales and consumer sentiment. But today CPI, tomorrow is PPI, and that's another part of it. So you get a PPI read on Thursday harder than the CPI read. That just tells you that the producer price level is getting hammered and that you have potential issues going on there down the road for the CPI. So, but they're not going to be able to maneuver on margins and stuff a whole lot more when it comes to the PPI. If inflation goes up on the income, on the input costs, then that's going to get passed along to the consumer. Then it shows up in the CPI. So at this point, I would just start off range bound, waiting for the number, and we are very much we know exactly what to do when it comes to reactions at this point. So if we get the reaction, it takes us above the 78.20, just stay on the long side. If you get the reaction, it takes us below the 77.20s, stay on the short side. If not, just stay range bound. If you get the volatile reaction where it whips back and forth kind of violently, but it doesn't really move directionally, in other words, volatile but not directional, then we'll just fall back on the analysis, and that's just flat out fading the ranges. So at this point, looking for shorts against that 77.85s, the 95s, the 78.05s, 78.20s. Looking to buy weakness against the 77.65s, 55s, 45s, 40s, down to the 25s here for rotations back up. So fairly straightforward. Levels are very much the same. I pretty much just adjusted a few levels here in the middle. Very much the same levels as yesterday. But the big question mark is reaction. And you're looking for, if you get a directional move, in other words, you get a big fat bar like this, but it's like 5 to 10 times the range of any other bar, that would be a new state reaction. That reaction you want to go with. So you're looking for a balanced bar, which would be a bar looking like this, a little bar within that big bar. and then you take the direction coming out of that. So that when it starts trading higher or lower, you take that direction. You can take it right as it does it, or you can look for a bit of pullback before you do it. Up to you, but it's you want it to take the direction it goes. It's a pretty no-brainer trade. It works fairly well, so it doesn't work all the time, but fairly well. If it's very, very volatile, sometimes you get that balance bar and they swing back and forth a few times on the levels, but it's around that bar as well. But it has worked pretty good. So I mean, it's worth taking a crack at if it develops that way. So volatile but not directional, fall back on the analysis, and that's just flat out range bound trading, fade the edges. And if it's a new state type of trade, look to go with that trade or take the direction as it comes out of the first balance bar. And as it is, the balance bar is going to be a bar like that. It's going to be a bar inside the prior bar. On the NASDAQ, we are looking at a very similar dynamic, except they're not in a move out of the middle to the upside. They're just trading in this range between the 29,280s and the 30,060s. We've been talking about that for a few days, hasn't really changed. And the same dynamic happens here. So you're looking at volatile but not directional moves. Then we're going to fall back on the analysis, which is range bound. And if it's directional, then we look for a balance bar and then look to take that direction. Now, NASDAQ, I would be giving a little bit more room. NASDAQ is so whippy. So sometimes you get that around that balance bar, it whips back and forth pretty good. But it doesn't really negate the trade. It just makes it something you have to pay a little bit more attention to in terms of how you put your stop in. So fading the edges, looking to sell strength against the 850s, 890s, 970s, up to the 30,060s. They're going to buy weakness against the 790s, 730s, 670s, 630s, 570s, down to the 530s, and a lower, all the way down here to that 270 to 80 level. Now, you don't have to remember to write down all these levels. I leave those up. So if you don't have them drawn out in your chart, or you want to catch up as to where, just keep the room open and glance at my chart, and you'll see where the market is at in the bigger picture. This is not scalping tick size super quick action. This doesn't move that fast. So you'll know where the market is. You look at a little black arrow on the side here, you'll see where the market is at, and you can just glance at these F2s. The idea really with these F2s is that you learn how to draw them yourself based on what levels which stands out on you and stands out when you do your homework. And once you draw these levels yourself, you don't need, I mean, you're self-sufficient at that point in terms of finding out when support resistances are at and where you want to engage the markets. So the hard part is after you learn how to draw them and you start drawing them on your chart and you get all the homework done. The next hard part is to actually follow the homework, actually stick with the game plan and not just forget about it and shoot from the hip and things start moving. Anyway, sidetracked. So we're starting off range bound, looking to fade the edges fairly equally, waiting for that CPI reaction, and that's going to change the dynamics. Either we're going to stay range bound if it's a volatile but not directional move, or if it's a directional move, they start taking out edges, we're going to hopefully be in that direction. All right, so that's how we get started on the ES and the NASDAQ. Looking at our bond market. What the hell did I do now? Sometimes I mess things up here. Click on the wrong stuff and then get all the stuff screwed up. There you go. There you go. So on the bond market, we're pretty much to the upside a bit. Yesterday it took a nice leg higher. The overnight hasn't backed off a whole lot, so we're drifting a little bit to the upside. And but in the bigger picture, look at capital flow, we're pretty much trading at this edge. We were down here towards the lower edge, and we are right back here to the middle again. We're just building value here at this lower support area, and it's going to just set up for another potential leg lower. Is what it very much feels like. So you can see over the last few months how bond market has been very organized or very orderly trading to the downside. Back and forth it goes, but net to the downside. So I would start off range bound. At this point, look to trade fade the edges, waiting for the news day reaction or news reaction to see where the market's going to go. And the same story there. If on the bond market, we are pretty much in the range. Looking to sell strength, 119.16, 119.20s. Looking to buy weakness, 119.04, 119.31 to 109, the buck. So 2 levels down, 2 levels up. I'm not doing more than 2 levels now because it's not that volatile anymore. So it's been very much to the downside. And when you get a move, that's when you have to pay attention. So today could be one of those days we get a good move on the bonds. We'll see if it's going to be up or down. But if it's a big bar, which is like good, 5 to 10 times the range of the prior bars, well, then you have a potential new state trade going on there as well. And finally, on the cryptos, you can see the silver is to the upside. It has a nice little run up here from 65 to 66. And silver, gold is also net to the upside. Oil is moving a little bit. It's trading around 83, 84 right now. So as well, also to the upside. And I mean, oil is going to be what it is. It's depending on that conflict and what happens there. But both cryptos, we see like Bitcoin and Ethereum, both those futures contracts are trading higher. So everything seems to be have a little bit of a risk on feel to it today. So the AI trade results from these companies seem to be pretty good. At least Corby, the hyperscalers, because I remember the big fear about for CoreWeave and other guys that there's not enough spend and there's not enough power and there's not enough of anything for them to keep doing what they're doing, and then they come out and report that they're doing exactly that. So they're doing exactly what they thought they couldn't do, and the market takes off again. So yeah, I think that on the positive undercurrent there is definitely what. On the Nasdaq side of things, it looks a little bit positive, and on the cryptos also a little bit to the upside. It's kind of uncanny to see how, if you watch silver, for instance, silver tends to trade very similar to the Nasdaq. So I've been watching the silver futures on Coinbase closely with Nasdaq, and I say sometimes you see Nasdaq tanking, you see silver just tanking right with it, and it's not a perfect correlation by any means, but it's uncanny sometimes. You're sitting in a trade and it's going against you. You see Nasdaq running against you as well. It's like, oh crap! You can see how they just take you out. It is interesting. So finding little correlations like that across markets is interesting. Anyway, back to the ES and the Nasdaq. So we are waiting for news coming out in about 12 minutes. CPI, and at that point we'll see how the market reacts and then we'll adjust accordingly. Alrighty guys, we'll wrap it there. So good trading. If you're going to trade the CPI, I would just wait for the whippiness to stop and then see what kind of reaction you have and then start trading it accordingly. Alrighty guys, we'll leave it there. See you back at 11:30 for the next update. Later.